This is a chart of Ethereum over this current cycle, over 1100 days of market action, highs and lows, washouts, new fresh cycle high prices as we verge on a new all-time high price. What took Ethereum 2.5 years to do, running from $880 up to $4,100, has now taken ETH only 4 months. That's about 120 odd days. Now we're looking at time frames into local tops. We're going to touch on cycle tops. We're going to look at price targets for Ethereum and also what happens around these stages, what these moves typically mean to the rest of the cryptocurrency market. I'm going to give you my bearish thesis and the bullish thesis around the current market environment. And this is for Ethereum. We'll look at Bitcoin, altcoins, and of course the traditional markets, as we're also seeing more risk on environment with new all-time highs covering the stock markets, the US stock markets, and for the Aussies, the Aussie market as well. Hit the like, subscribe to the channel if you're new. It's your home of macro cycle analysis. We cover everything from the real estate cycle to stock markets, commodities, and cryptocurrencies, bringing it all together for a unique perspective on the markets. Today, focus is on ETH, but of course, I'll cover the lot for you. So ETH obviously running up here, new fresh highs. There is a lot of noise around Ethereum. You can see here the yellow line is Ethereum in the search volume. It is at new fresh cycle highs for the search volume on ETH. You can see it's at 17. If we zoom in there, the last time we were at 17 was well before the cycle low, June 2022. The last time we saw those was basically around the dump of May 2021 before it started to come down from that point. And then basically ETH was not looked at in the same fashion since that point, basically search for. Crypto in the blue here is also surging. Bitcoin is also surging, and we'll talk about those in a minute. But I'm looking at time frames here because as the price surges, the common question that comes up, where is the top? How long until the top? People are trying to sell the top. They want to know if they haven't got in, how much time do I have left to buy ETH until it runs into a top? So hopefully I can give you some insight for at least a local top, which is where I want to go to next. This line at the bottom here is 19 bars. So this is essentially 19 weeks because I'm on a weekly chart. And you can look out to where the current price is. It's sitting at 18 weeks. So we're 18 weeks up from the low price. Significant low here. It washed out all of these previous stops and touched below the September and October lows for ETH and also the banking crisis low. So a pretty significant low that formed there. So we're 18 weeks running up into this price range. Not only that, we're very close with something that has only happened 3 times in this cycle so far for Ethereum and also other tops. Now, I totally get it that everyone is on this bullish train. They're super excited about the price, and it might sound like I'm getting a little bit bearish here. I am not. We've done some fantastic things for ETH, breaking through the resistance level at 4,100, breaking through the psychological level of 4,000, breaking through the downtrend from the previous cycle connected to what was the current cycle high. So they're all extremely strong macro indicators that the strength is here for ETH. But in the medium term, as I'm showing, or at least the analysis is pointing to, things can slow down, but that's okay because we have a lot of room here for Ethereum to consolidate. And that's essentially what we want it to do. So I'll present the data to you. You can make up your own mind whether you think it's going further. I'll let you know my thoughts as well later in the video. 19 weeks would be next week. And the reason why I've got 19 is ETH did this move last time. We got 19 weeks to this higher price here. Basically that low from 2,000, 2,100 up to around $4,100. So pretty significant move there to that high. The other time here was 22 weeks to that top. Super significant low, as I pointed out earlier, into that first time it hit 4,000 for the cycle. 22 weeks again. That's what this bar says right here. From the low, this is November low. So basically FTX collapsed at that point. Bitcoin hit a new cycle low. ETH had actually put in a low prior to that. And then 22 weeks brought us to that first top there in April. So the market the buyers and the sellers, well, in this case, mostly the buyers, basically have 22 weeks of energy in them. If they get to 22 weeks, they basically can't go too much further. I could put in some sort of sexual innuendo there. I'll leave that up to your own thoughts, but that's what the market has done. It's essentially 1, 2, 3 times, and it was a little bit premature on the last time so far. So we're at 18 weeks at the moment. Can we run it to 19 weeks, which will come through for next week? If it can run to 19 weeks, we're looking at something around mid-August. If it can run it a little further to 22 weeks, then we're looking somewhere around early September, which also aligns with a couple of other indicators I'll show in a sec. But more importantly, some sort of correction or consolidation is a nicer term there. Consolidation for quarter 3 before we can get that big move into late quarter 4. But don't hear me wrong. Some of these consolidations might be relatively quick. It's possibly not what we've seen in the past where it's taken multiple weeks to consolidate. So it might leave a few people in the dust if they're waiting for the same sort of pullbacks that we've seen in this cycle so far. Those longer pullbacks generally happen earlier in the cycle as the market consolidates and more of the market shifts from bears into bulls, putting in, as you can see here, higher lows along the way before it begins to break out. As you get later in the cycle, 1100 days so far for Ethereum, then those pullbacks become a little more shallow because you've got more bullishness in the market. So the prices are getting bought up at higher lows and people get a little bit too over the top. So to go back to more of Ethereum's price history, you've got 20 weeks low to that final top. You've got 20 weeks again from this significant breakout point. This is December 2020. It ran into that final top of May. So I'm using this point because that's basically where that energy really did begin to shift. And you can see it also with the swing chart and then the breakout levels. You got the breakouts right through these tops. And then as it started to get going, it broke the lower swing top. So a very significant area there. So 20 weeks into that first high of May 2021. And then a few more data points, which basically show the same thing here. You've got 20 weeks to the upside to this first move, and then it halted. So basically the energy again ran out at that point. 22 weeks to this. So 20 weeks, 22 weeks, and then 25 weeks to that top before it corrected. 22 weeks from the cycle low in 2018 to that first point where basically the energy again ran out. You could add on a few more weeks for this top, but the price didn't go anywhere from that point. A smaller run into the end, which essentially lets those late buyers get in, think they've got a really great deal, and then it basically squashes them. I don't think we're at that stage, just to make it clear. We're just looking here at the 20 to 22 week period that Ethereum continually puts in throughout its history. And the only other time it didn't happen was basically its early years, its first cycle. It has a couple of shorter moves into these highs, which would probably have to put us on red alert for the quarter 4 of 2025. So quarter 4 coming up, you've got 9 weeks, basically your 2-month period as it broke out and ran really damn hard into that final top. And then the other one here is around 27 weeks from the cycle low into the first top there of June 2017. So slightly longer, but then the consolidation was quite big there. So that's a look at the weeklies. Now let's go down to the dailies. So a couple of reasons here for at least some consolidation. I'm looking at a broader picture. The next days to weeks in this period consolidates, and then we're looking for bigger things. And I think there are bigger things. As I pointed out, this break here supersedes all of the shorter term stuff that I'm talking about. But the question often comes up, is this just going to keep running on forever? Generally not. And here is another reason for that. We've got 10 days now. So as I was filming this, we're at 9 days. Now we're at 10 days. Higher lows and higher highs. Each of these bars, you can see they have not broken the lows. Some have not gone higher, but they haven't broken the lows. So the buyers have basically been stepping in like this is going out of fashion, and they keep buying before it gets to a lower price than the day before. And we now have new highs. So 10 days in a row. This has only happened once in this cycle. That was back here, the 10th, January 2023. We had 10 days up, really strong move as it broke out of the highs there. That was after December 22. Bitcoin was breaking out at that time as well, coming out of its bear market slump, that low that was in November. And Ethereum did the same thing here. So it had 10 days straight up into this first top, and then price basically stalled. It did go a little further, but I don't think the majority of people are here looking for these small moves, basically from 1600 to 1670, $70 moves, right? You're looking for these big moves and having to be patient through that period. Traders, different story, but the longer term holders, right? So it's happened once before in this cycle. Continuing on with some of the indicators that are suggesting we're getting a little overextended, not saying the game is over, but just a little overextended here, looking at the ETF flows. Now I say little, I mean massive. It's the highest ETF inflows in Ethereum's history. We've seen this before around tops. This is going back to December 2024. So that was around that final top. And remember, through that point, that was 900 days, 917 days from the low. So the game had been going on for a long time. The cycle move had been going up for quite a considerable amount of time. Huge inflows came in towards the peak. Retail buying at the wrong time, institutions buying at the wrong time. It's not always retail that gets it wrong. Remember, the majority of the money is held in institutions. They have billions and billions of dollars. Retail, not so much. So institutions also get it wrong. It's not a go at retail traders. A lot of retail traders can actually do very, very well. Back to the point here, before I digress too further, huge inflows around these highs. And again, people trying to buy the dip. And of course, the market kept on dipping. Now we have a similar scenario here. Huge volume. This volume was bigger than what we saw earlier on in December. The volume here through July. Now, of course, the market did keep running up, but it paused after that point. So it ran up. The majority of the gains had been had to that point before we got to the extreme highs of the inflows. And of course, from there, consolidation. So that's a good point there where, yes, we've seen the biggest inflows in history. It doesn't mean that the move is entirely over, but it has shown before that, yes, it could creep higher, but it's likely going to be some sort of consolidation. What happened last time? Consolidation from that big bar to the breakout. You're looking at 3 weeks in that case that we just saw. We might get something a little longer this time, a little shorter, but nonetheless, it's going to be I think, a longer consolidation than what we've seen literally here. 2 days. 2 days of consolidation, and then basically it broke out again. So a lot of the timing is suggesting some sort of consolidation coming up. Price-wise, we have blown through the 150% extension, so it's good news there. As I talked about in yesterday's video, looking at a realistic and conservative price target for Bitcoin and Ethereum. On that video, I was looking towards 51 to 5,200. Several reasons. I'll leave that video at the end of this one if you want to watch that after this. And then we had some more price targets further up, around the 7,000 and 9,500 for reasons, as I said, I gave in that particular video. So at the moment, things still look on track. We've hit the 4,300. We're getting close to the previous all-time high price, which is 48.70 for a round number. And then of course, psychological levels start at around 5,000. And then I've got some extensions here, 51, 52. So a lot of work between now and those price targets, but I think there is the chance that we do it this particular cycle. So that's looking all right there, especially if ETH is able to hold these levels. And if it does pull back, consolidation above roughly 38 to 3,900 is still looking bullish for the structure. So people are going to freak out if it does happen because of the amount of ridiculous emotion in the game right now. So if it is to pull back to those levels, as I said, 38, 39, you're looking at roughly 17% odd. Consolidation could look like this. It could look like this. The market needs time to digest the move, take time before it can start to print higher highs. And that's, of course, if this price comes in here. If it's a little higher, then we just do the count from the tops to those lows. But it has to stay above these highs. And you can see it also comes in with a lot of the area price action previous to this. No closes underneath those levels to maintain bullish structure, consolidate, and push higher. So what else is next is the ATR. So the average true range is yet to break out of those previous highs at around 240. This is basically looking at the daily bars, and we typically see the average true range pick up on spikes to highs or dumps into lows. Last cycle was absolutely massive. So it coincides with coming towards the end of moves because of that capitulation, whether people are capitulating into the market in the euphoria, the FOMO, or at the bottom. The fear and greed is also still looking okay here. The new day announcement came out. The data points in here at 73. So we're still in greed, but not extreme greed. Still looking pretty good. And then our FOMO finder as well. It hasn't reached those FOMO levels of orange and red, which we've seen only a few times through this cycle, which also coincided with the tops. You can see the fear and greed index was hitting extreme greed on this occasion, and also this occasion in March 2024. And the FOMO finder also lined up with orange, basically jumping into that greed, not necessarily the extreme FOMO, but it was still in the greed stage there in the orange. And when those two are lining up, you've got a pretty good signal that a top is coming near, or well, yeah, near, very, very close. And we don't have either of those yet. Now, all of these indicators that I'm using as part of the indicator suite, we've added a whole host of new indicators. A link to this is in the video description. Along with that is the Gann Swing Pro and predictive cycles, forward returns tables, and the decennial cycles that we use for the long-term outlook. So with Ethereum moving up, it has pushed other altcoins higher, or other altcoins have dragged along with it. Those in the top 10 have done relatively well. We've seen Solana do well today, XRP, Sui, they've all pushed higher, 5, 6, 8%, and some of the other smaller ones have obviously done better as well. But the others' dominance chart is still lagging here. So it's at 7.67, which is why I'm of the view, if ETH can keep pushing higher, or at least consolidate at these levels, then we might start to get that move on for altcoins a little later. So this could be part of the ETH movement, maybe fresh highs, consolidation, which could then lead to some of that money rotating out into others, provided it doesn't break down from this low here at 6.8%. So that could lead to further downside, further losses for altcoins overall. Remember, this excludes the top 10. ETH, Sol, XRP, Doge, stable coins, you name it. Those are in the top 10, right? So at the moment, it's still looking weaker. The idea here is that it gets past at least 8.8 to 9%, and then there's heavy resistance around the 10% level. Overhead diagonals, under support level diagonals, all coming to a T somewhere in September at around that 9.8 to 10%. Hasn't overbalanced any of the previous moves to the upside, which is needed for a stronger bullish market. You can see that is a stronger move. That is also a stronger move. So far, they just haven't done it. So there are gains being had in altcoins, of course, but those longer, I'm just going to buy now and sell in a few months' time, hasn't necessarily eventuated like it has done in previous cycles. And that's what the chart is saying here. These are those previous altcoin seasons that you can see from 2017 and 2021. This is what's currently looking like on the others chart. But back to the good news for the bulls, at least, the USDT dominance, provided it also breaks 4%, we got a good clear ground here getting towards 3.7 to 3.8. This is something that we've been following now for many, many, many months. It called the top earlier in this cycle, so December and January 2025, so 24, 25, and then huge inflows back into stablecoins, which crashed the markets. It came out of stablecoins again, Bitcoin climbed, ETH climbed, other altcoins did climb, but then came flooding back in. But here we are, we're back down around 4%. So when this thing goes down, that's what we want to see for the altcoin market. And at the moment, it's heading down, but we've got to break this 3.7. So if all this is lining up with what I've talked about with others, giving that time there, once ETH potentially consolidates, and if the gains can be held there in that higher phase of the consolidation, so things don't break down substantially and Bitcoin holds up too, we might be on the verge here of a distribution for stablecoins and the breakdown at 3.7. But the confirmation comes from the breakdown of 3.7, which of course we haven't had, but we're in a good position so far, coming underneath all of these zones. Meanwhile, Bitcoin's still holding up. It's had its highest daily close in history at the moment, obviously pulling back, but highest daily close in history, and it's above the 7-year resistance level. That's what this white line is across the top, connecting previous bull market tops, which again got rejected this cycle so far until now. We're holding above that level. So that's a good sign there for the overall market. Bitcoin holding up. As I said, I'll leave a link to this video at the end of this one here, going through some realistic top targets for BTC and ETH along the way into those prices. So things are looking good there, and also looking good for our traders. That I'll drop this one in here. These guys are doing absolutely amazing. If you want to see these reviews and the trades, link is in the top of the video description. Plus you'll get the free reports that come out. On that email, it'll say, this is how you enter the Discord chats here. So you can check out the results, you can check out the reviews, scroll back through all of them and see what people are saying about it there. Another good sign is that the exchange volume has begun to pick up again. We saw a low form around the 8th and 9th of August, and the last few days we've begun to see more inflow or more money coming back into the exchanges. People getting pretty happy trading. Hopefully they're making gains like I looked at here with our traders doing some pretty amazing results. Well done to Adam, 3,000%, 800%. And hopefully they're not getting liquidated, getting absolutely crushed here on some of these shorts. You can see the red at the bottom has increased. This is the liquidations chart. Today we had about $500 million of liquidations come through. There it is, 480 million. And with the liquidations, basically just flushes out that extra leverage there that's on the wrong side of the market. And we're able to obviously keep going with the trends as we're seeing here on the exchange volume. Now you should be getting the idea of this chart if you have been following the channel for some time. If you haven't, that's your cue to subscribe now. The 18-year cycle, yes, we're still heading up into the peak. Things are getting closer and closer by the day towards this 18-year cycle peak, but I think there's still a bit of risk on environment to go. We've got US national debt at all-time highs, money supply at all-time highs, real estate, that's home prices that they call it in the US, is at all-time highs. That's your national average. Some areas not so, but national average, all-time highs. Stock markets just hit another new all-time high. Bitcoin, of course, a new all-time high daily close, and gold is trading around those all-time highs. Now, this is off the back of the Fed maybe. It's been a maybe for the whole year. We've been saying pauses for the interest rate. The market has been saying cut, and it hasn't done anything. September is now firmly looking like a cut, 95%. But of course, there's still 35 days to go until the next FOMC meeting. As I said, there is all-time highs on absolutely everything. Why they want to cut? It's just Trump possibly making headlines. At the end of the day, maybe they get a cut this time, and the market is potentially pricing that in at the moment. So maybe we're running into some sort of buy the rumor, sell the news event. The rumor, not necessarily a major rumor. It's not a bad rumor, I guess. People looking forward to an interest rate cut. So markets are potentially rising to that. Once we get to that point in September, or maybe they front run it, maybe we see that pullback in the markets, and that gives it time to consolidate, which would then track what we're looking at with our 5-year cycle. So you can see the 5-year is climbing higher, and there is a pullback somewhere around late September. So this is the 5-year, which, if you remember 5 years ago, was COVID. The red line shows the COVID dump and then the recovery out of there. We've been tracking this for months now. It's following pretty closely with what's happened over the last the 5-year repeat, looking back 5 years ago. And through that period, the September-October period for 2020, that was when the old COVID 2.0 was coming out, and then COVID 3.0, and this is going to crash the market again. And as we know, when you've already heard a news event like COVID 1.0, it doesn't affect the market as much the next time. That's what happened this year in 2025. We had the tariffs, what I'm calling 1.0, and then we had tariffs again somewhere in here. So they're on again, off again. The market's calling that a taco trade, which is basically Trump flipping on his tariffs. And then again, we had tariffs just recently, a couple of weeks ago, putting them on, coming off, new all-time highs. So maybe we come through something like that again, whether it's tariffs, whether it's interest rates. Nonetheless, I think that is still setting up the markets for a good position overall, which if we do get to a consolidation through the later part of quarter 3, we've still got further to go in the cycle. And that's what I'm drawing all of the data back to, that there is still further to go in this upside. And the crypto markets can also keep going with that move. This chart is for the S&P 500 with interest rates. So the index around first cut following easing cycle pauses of 6 months. So we've seen the interest rates pause. What happens after the pause if they get cut? So this is just flowing back into, if you haven't already picked up, looking at ETH and cryptos. If we're going to see further upside here for the stock markets, here are a few other data points, what happens after those cuts, it still looks like a risk on environment. So here is the first cut after a pause, and this is months down below. It looks like it keeps heading up, according to this, going back to 1976. And prior to the cut, with the multiple months of pauses here, 6 months of pauses, it's strange what's happened. That is what the market did then. And we've seen a very similar thing happen to the stock market as well, a dump and a recovery. And for now, there's been less of a recovery than what we saw before, consolidation, and then maybe we do get this big move higher from there. The other thing that's also in lockstep is the home builders ETF, which lines up with our, which is part of the 18-year cycle. We're watching this for a topping pattern, which hasn't occurred yet. This is in lockstep with the stock market. Home builders going up, stock markets going up. And if I can find my other post here, everything running into new fresh all-time highs. This is still strong for the markets, even if this does run into a lower swing top. This is the early warning sign that everything will eventually come crashing down, like last cycle. Last cycle, late 2000s, 2005 to 2007. It peaked around mid-2006, home builders ETF. The stock market peaked much, much later in October 2007. So over 12 months later, this was already down. The home builders ETF was down by over 50% by that time. So do we see a top here in November? Do we break through? That's what is the next big question to ask around this cycle, because how weak everyone thought it was, and it hasn't been. We've hit new fresh all-time high prices, which has led to ETH, Bitcoin hitting new all-time highs, ETH hitting new fresh cycle highs. And if that wasn't enough for you, the Elliott wave is still playing out. This is something that Michael shared with us back at the beginning of the cycle. And there's the possibility, if all of this plays out, that I've been covering now for years on the channel, the home builders ETF, is continuing to hold strong here at least. The stock markets are up, new national average prices for houses, all this sort of thing. We're probably going to see a pretty significant move for the cryptocurrency market. In this case, this chart's for Bitcoin. If ETH is able to break to some highs, great. Maybe XRP, maybe your Sols and your Suis and all that sort of stuff as well. But nonetheless, just looking at the total crypto market cap, it is also in this position to run into wave 5 of the end game, the last wave 5. Basically, the final move until we get to that peak. So I think there's still a fair bit of positive news around, even if this is going to be a short-term pause eventually. There is a lot of signs to suggest that markets do eventually have to pause and consolidate before they run again. So that's why I thought I'd hit you with that earlier on. That sort of wipes out the people who are only looking for the bullish action. They don't stick around to the end to see all of the actual macro bullish action, which I think is still sitting there in the markets. We've seen higher prices, and I think there's more to go. Hit the like, subscribe to the channel. Don't forget the reports that are out this week, plus the TIA indicator suite. It's been updated with a lot of new indicators here. I'll see you guys back at the next video. Thanks again. Till then, take care and peace out.